Is this market rally a giant trap? Today, we're cutting through the noise. I'm going to show you what the big earnings reports from companies like ASML and Louis Vuitton are really telling us, and why the strange action in gold and small-cap stocks could be a massive warning sign. Everyone seems to be celebrating, but last Friday, we saw a huge spike in volatility that has investors on edge. It's like the market is trying to tell us something, and most people are not listening. The general feeling is positive. Futures are up, and the market is banking on the Federal Reserve to start cutting interest rates. But beneath the surface, there are cracks. U.S.-China trade tensions are still simmering, and some data suggest inflation is ticking back up. The market is walking a tightrope, and any unexpected comment could trigger a major move. But let's look at the facts we have. Earnings season is here. The big banks kicked off with solid results. Bank of America beat expectations on both earnings and revenue. Their investment banking and interest income were strong, which gives the market a dose of confidence. And speaking of confidence, look at Louis Vuitton. Their results blew past expectations, mainly because Chinese consumers are spending again. This is a huge indicator for the global luxury market and a positive sign for China's domestic recovery. But the real star of the show is ASML. This company is at the heart of the AI revolution, making the essential machines that produce the world's most advanced chips. Their results were strong, their stock is flying, and they are now the largest company in Europe by market cap, even surpassing Novo Nordisk. Analyzing these reports is crucial, especially now. If you want to stay ahead of these market moves, make sure you subscribe to the channel so you don't miss these weekly updates. Now, let's be real about ASML. Yes, it's a phenomenal company, but it's trading at 35 times its future earnings. That is a steep price. More importantly, it's caught right in the middle of the US-China tech war. Any escalation in tensions, and ASML gets hit hard. I'm personally invested, but I have to ask the question, at this price, would you be a buyer or a seller? Tell me in the comments. This optimism is creating some strange situations in the broader market. The S&P 500 is stuck in what I'd call no man's land. It's been rejected from the highs and now needs to get back above the 6,700 level for us to feel more tranquil. Below that, it remains vulnerable. And here's something very curious. Non-profitable technology stocks, the riskiest of the risky, have absolutely skyrocketed in the last few days. The Russell 2000 index is seeing huge inflows. This often signals that retail investors are jumping in with both feet, chasing quick gains, which can be a sign of a market getting ahead of itself. At the same time, gold and silver are hitting all-time highs. Think about that. Usually, gold goes up when investors are scared and running from stocks, not when the stock market is booming. Meanwhile, a high-risk asset like Bitcoin is showing weakness. These signals don't add up and suggest there's a lot of tension under the surface. And we're seeing this tension play out in individual stocks. Look at Uber. Its stock is falling, and a big reason is that Waymo, Google's self-driving car service, plans to launch in London. This is a direct, long-term threat to Uber's entire business model. On the other hand, you have stocks like Papa John's and the uranium company Cameco that are on fire. I'm also keeping an eye on some smaller companies that are making interesting moves, like Greenland Technologies, which I'll be taking a closer look at in a future video. So what's the bottom line? The market is celebrating strong earnings and the promise of Fed rate cuts, but the underlying tension from last Friday's volatility, the contradictory signals from gold, and the speculative froth in risky tech stocks tell me to be very cautious. Yes, every dip has been a buying opportunity in this market, but don't get complacent. This is not the time to go all in with your portfolio. Don't just follow the headlines, understand the context. If you found this analysis useful, subscribe to the channel for more direct, no-nonsense insights. Now I want to hear from you. Are you buying this rally, or are you taking some profits off the table? Let me know in the comments below.